Wow, Microsoft is certainly making headlines today with a mix of industry insights and tough internal news. Let's dive right into it. First up, the shining data point. Microsoft's current standing in the software industry. Despite the dog-eat-dog world of technology, Microsoft continues to be a powerhouse, dancing in a spotlight of impressive financial fuel. The software giant is holding its own with some solid metrics, a price-to-earnings ratio lower than the industry average, and a price-to-book ratio that hints at a hidden potential ready to be tapped. In simpler terms, it's like finding a high-performance sports car parked in Granny's garage. Tons of horsepower, just waiting for the right buyer to rev it up. That being said, things aren't all jazzy numbers. With a higher price-to-sales ratio, they find themselves on the pricier side for what they're bringing in on sales performance. Does it scare investors away? Probably not, especially with Microsoft's lush returns like their striking EBITDA and gross profit numbers. The company exhibits higher earnings before interest, taxes, depreciation, and amortization of a whopping $38.23 billion. That's higher than a stack of floppy disks reaching the moon, or at least 48.39 times over the industry average. Now, Microsoft doesn't just relax in its financial stats. Its nimble moves like a ninja showcase faster than average industry revenue growth at 16.04% against an industry standard lounging at 10.21%. Meanwhile, Microsoft's debt-to-equity ratio paints a pretty picture. Imagine balancing a Microsoft Surface on one of those rooster statue fences. That's their impressive 0.21 ratio, making them look strong and stable among their industry's cawing competitors. But hold your hoverboards, because not every spotlight brings flattering fronts. Microsoft plans a grim cut in its workforce, primarily targeting employees who might not be pulling their weight in performance. Cue the HR roller coaster. The company mentioned its move reflects an aim to keep their talent pool brimming with high-performance professionals. Even if numbers of affected employees remain unspecific, the anticipation strikes like a retro video game boss. Harder every layoff increment. Microsoft is largely leaning back and letting around 1,000 employees go per situational turn, with sectors like gaming feeling the burdening pinch. Finally, how did the market react to this nuanced cocktail of good and grim news? Microsoft's stock barely broke a sweat, closing up by just 0.52% Thursday, even if after-hours trading saw the shares slipping a smidge by 0.13%. It shows how the enchanted castle of Microsoft's offerings tempt investors to believe brighter halls lie ahead. That's Tech Tea for today at Microsoft HQ, ranging from financial triumphs to challenging workforce transitions. Stay tuned, as even in the yin and yang of tech, every puzzle piece loops into a bigger, defining narrative. Thanks for watching to the end. Remember, this is just one story from our full daily show, which includes all the other news and an analysis of the day's tech market activity. If you found this video interesting or insightful, then please like, subscribe, and share it with others. Your support is greatly appreciated. Catch you later.